The money in your bank account is about to change forever. Not the amount, the money itself. Right now, while you're watching this, governments across 70 countries are quietly building a new financial system that could track every single cent you spend, where you spend it, and even stop you from spending it at all. This isn't conspiracy theory. This is central bank digital currency, and it's already here. Let me ask you something. When was the last time you actually held cash? For most of us, money is already digital. Numbers on a screen, plastic cards, payment apps. So when governments say they're introducing digital currency, it sounds harmless, even convenient. But here's what they're not telling you. The digital dollar, the digital euro, the digital yuan, these aren't upgrades to the system, they're replacements. And the difference between your current bank account and a CBDC is the difference between being watched and being controlled. CBDCs, Central Bank Digital Currencies, are the future of money that world governments are racing to implement. China is already testing theirs with millions of citizens. The European Central Bank has approved the digital euro. The Federal Reserve is deep into research on the digital dollar. Brazil launched theirs in 2024. India is running pilot programs. This isn't coming, it's arriving. And once you understand what CBDCs actually enable, you'll realize why billionaires are buying gold, why crypto advocates are sounding alarms, and why your financial privacy is about to become a relic of the past. Here's how money works right now. You earn dollars. They sit in your bank account. The bank holds your money, but it's still yours. You can withdraw cash, you can spend it anonymously, you can transfer it to whoever you want. Sure, banks and governments can monitor large transactions, but for everyday purchases, you have privacy, you have autonomy. CBDCs obliterate that model. With a central bank digital currency, every unit of currency becomes a programmable token issued directly by the government, not your bank, the central bank. That means every transaction flows through a government ledger. Every coffee purchase, every tank of gas, every donation, every payment to a friend, all of it visible, trackable, permanent. The Federal Reserve, or whatever central bank controls your CBDC, doesn't just see what you buy, they control the currency itself. And here's where it gets darker. Programmable money means the government can attach rules to your dollars, expiration dates on stimulus payments, so you're forced to spend quickly, geographic restrictions, so your money only works in certain areas, category blocks, so you can't purchase certain goods, say too much gas or meat, or whatever they decide is excessive. They could impose negative interest rates, automatically deducting value from your savings to force economic activity. They could freeze your funds instantly without a court order if they deem you a risk. No trial, no appeal. Your money just stops working. China's already doing this with their digital yuan. It's integrated with their social credit system. Spend money on unapproved activities, your score drops. Your score drops, your currency privileges get restricted. You can't buy plane tickets. You can't get loans. You become a second-class citizen in your own country, not by law, but by code. And Western governments are watching, learning, salivating at the control possibilities. Now, let's talk about why this is happening so fast. The official narrative is always the same: efficiency, security, financial inclusion. They'll tell you CBDCs will help the unbanked. They'll stop money laundering. They'll make transactions instant and free. All technically true, but those are the selling points, not the reasons. The real reason is control in an era of instability. Governments are drowning in debt. The dollar's global dominance is being challenged. Inflation is eroding public trust. And when the next financial crisis hits, and it will hit, they need tools to manage the chaos. CBDCs give them unprecedented power. They can track capital flight. They can prevent bank runs by simply turning off digital wallets. They can implement monetary policy directly. No banks required. It's the ultimate centralization of financial power. But there's another layer. The death of cash enables perfect taxation. Right now, the cash economy, under-the-table work, side hustles, small businesses that deal in bills, represents trillions in transactions that governments can't fully tax. CBDCs eliminate that. Every transaction is recorded, every source of income is visible. The tax net becomes inescapable. You think the IRS is aggressive now? Wait until they have real-time access to every financial move you make. And the corporate angle? Payment processors like Visa and MasterCard should be terrified, but they're not, because they're positioning themselves as the infrastructure providers for CBDCs. Big banks are partnering with central banks to manage the digital wallets. The same institutions that control finance now are ensuring they control finance tomorrow. This isn't disruption, it's consolidation. Let's get practical about what life looks like in a CBDC world. Imagine you donate to a political cause the government doesn't like. Your digital wallet gets flagged. Not frozen, just flagged. Suddenly, you're audited. Your transaction history is subpoenaed. Or maybe it's simpler. Your money is programmed not to work for certain organizations. Click, blocked, done. Or imagine you're trying to save money, but the government has implemented a negative interest rate on all digital currency to stimulate spending. Every month, your savings automatically decrease by 2%. You're not being taxed. Your money is just evaporating by design. You're forced to spend or invest to avoid the loss, exactly as they planned. Or imagine a recession hits. The government issues stimulus, but it's programmed to expire in 90 days. You can't save it, you can't invest it. You must spend it immediately or it vanishes. They're not giving you relief, they're forcing economic velocity. Your choices don't matter anymore. The surveillance implications are staggering. Right now, Google and Facebook know what you browse. CBDCs mean governments know what you buy. Every purchase becomes a data point in your profile. Too much alcohol? Too much fast food? Your health insurance premiums could automatically adjust. Bought books on controversial topics? That's in your file now. Made payments that look suspicious? AI flags you for investigation. There's no opting out. There's no privacy setting. The system is the surveillance. And here's what terrifies economists who actually think this through. CBDCs eliminate the need for commercial banks in their current form. Why keep your money at Chase or Wells Fargo when you can hold it directly with the Federal Reserve? When the next financial crisis hits and people panic, they won't run to their bank to withdraw cash. They'll run to transfer everything to their Fed accounts. Commercial banks collapse overnight. Credit markets seize up. The entire financial system restructures around central bank control. It's not evolution, it's revolution disguised as innovation. Now, before you think this is all dystopian speculation, let me be clear. CBDCs are not inherently evil. The technology itself is neutral. A well-designed CBDC could theoretically preserve privacy, maintain decentralization, and genuinely improve financial systems. But that's not what's being built. Look at the actual implementations. Look at the powers governments are granting themselves. Look at the lack of privacy protections in the frameworks being proposed. The Bahamas launched the Sand Dollar. Nigeria launched the e-Naira. Jamaica has the Jamdex. These aren't theoretical, they're operational. And in each case, adoption has been slow because citizens instinctively understand what they're giving up. But governments are patient. They'll phase out cash gradually. They'll make digital more convenient, then necessary, then mandatory. Your choice disappears not through force, but through friction. And cryptocurrency, the thing that was supposed to be the decentralized alternative, governments are cracking down hard, not to eliminate it, but to corral it. They'll allow Bitcoin as a taxable asset. They'll regulate stablecoins into submission. But truly private, truly decentralized alternatives, those become threats to the CBDC system. Expect increased enforcement, increased regulation, increased control. The question isn't whether CBDCs are coming, they're here. The question is what form they take and what rights we preserve in the transition. So what do you do? First, understand what's happening. Most people won't know their money changed until it's too late. Second, diversify how you hold value. physical assets, precious metals, property, things that exist outside the digital ledger. Third, use cash while you still can. The death of cash is the death of anonymous transactions. Fourth, pay attention to CBDC legislation in your country. These systems are being designed right now, and public input matters if you make your voice loud enough. And finally, ask the hard questions. Who controls the code? Who has access to the data? What happens when the system fails, and it will fail? What rights do citizens retain over their own money? Can your funds be frozen? Can they be programmed? Can they expire? These aren't technical questions. They're questions about freedom itself. The money in your account is about to change forever, not in 10 years, right now. The digital currency trap is not that it's digital, it's that it's a trap. Control disguised as convenience, surveillance disguised as security. And by the time most people realize what they've lost, the old system will be gone.